In continuation my last night's video, today again I resume my interaction with my possible students or the students those who are aspiring for various management studies, and at the same time those who are appearing various examination related to commerce, business, trade, industry, all these things, and exclusively for the students those who are pursuing diploma in pharmaceutical studies as well as bachelor degree in pharmaceutical studies, and at the same time those who have gone through D Pharm, B Pharm and continuing their M Pharm even, they can also learn something regarding management, regarding accountancy, regarding marketing, regarding insurance, regarding banking transactions, all these things. So again I would like to introduce myself. I am Pradyumna Kumar Mahapatra. Academically I am an M.Com, post-graduation in journalism and mass communication, bachelor degree in legislative law, certificate program on human rights, MA in personal management and industrial relations, and Bani under Ministry of Information and Broadcasting. However, in continuation of my last night's video, I would like to share something regarding the segment of financial accounting, because whatever we learn, our ultimate aim and objective is to do something. That means we should undertake certain economic activities. No matter whether we are doing business, no matter whether we are doing a job or we are going to be professional, definitely knowledge of applied science like financial accounting should be there with us. And particularly as far as accounting is concerned, accounting has been divided basically into 4 categories. Number 1 is financial accounting, number 2 is cost accounting, number 3 is management accounting, number 4 is human resource accounting. And all these 4 branches of accounting have their own objectives. Financial accounting has objective to know the financial performance of an organization or of an entity during a particular accounting period. Likewise, cost accounting is focused to measure the performance of the resources and to compute the cost of the product as well as service we render in the societies or for the consumer. Management accounting also has been formulated to support the management in various ways so that their organization or their entity can be developed or can be more effective in the times to come. Likewise, human resource accounting is focused to measure the performance of human resources, those who work for various segments in an organization. Apart from this brief definition with reference to their objective, today I would like to focus on financial accounting, because when other branches of accounting were not there, we have used or we have knowingly or unknowingly we have started our financial accounting system. Supposing you just recall your childhood days, or when you were a student of standard 3, 4 and above, sometimes you would have been asked for marketing with certain amount of money by your mother and father, maybe of 100 rupees to go for marketing, and you would have done your marketing job, means to purchase various items as per the list prepared by your mother or father or whoever may be in your household, and you would have gone to the market and you would have purchased as per the list given to you. And after completion of purchasing, you are coming back to your home and you are giving the list, and at the same time you are trying to comply with your money what you had been given by your parents. That means you would have purchased within the limit of rupees 100. Suppose your total purchase value is 98 rupees and remaining balance either you are giving back to your mother or father who had given the money to you, or else, as a common practice, we purchase something for our own, or we just purchased our own item, means we may go for chaat, we may go for your mixture, or so many things what we like to enjoy. So sometimes when we are coming back, or when you come back to your home, your mother asks for the total what we can say total expenditure on what you have spent, how much amount of money. So systematically you tried your level best, or else we used to give a practice of having an accounts at our own way. We suppose we purchase potato, the value of potato is rupees, suppose 15 rupees or 20 rupees. Number 2 is brinjal's value we write down, and in this way we generally give a list of items and the value, and ultimately the balance amount rupees 2 in my example, as 98 rupees has been incurred as expenditure, your rupees 2 is balance and you are giving back that money, or else you are you used to tell that I have spent that rupees 2, and it is a usual practice. That is also an accounts, but it is a common habit, and the amount is very less, it's 100 rupees. But when we are talking of lakhs of rupees, crores of rupees, which are generally invested in our business, maybe salt trade business, definitely it is more than that. Maybe in the wholesale business, it is little bit more, and definitely in case of stockist and super stockist, the expenditure is more than that. And ultimately, if you are thinking of a manufacturing unit, or the expenditure of the company, firm of organization, the volume of expenditure is more, the volume of resources is more. So we need to keep the accounts in a very systematic manner. So we can define financial accounting in a way that it is an art as well as science of recording, analyzing, summarizing the business transactions in a systematic manner, and to obtain a result thereof after completion of one financial period is called financial accounting. So I have used a term transactions. What is transactions? Generally we purchase goods and we purchase service, and in exchange we give money. That exchange of goods and services in terms of money and in exchange of money is called transaction. So we are to record almost all the transactions in a systematic manner, means in a chronological way. Suppose we are starting our transactions today on 11th May 2020 with a single statement that we have purchased goods or medicines for rupees 10,000. That is to be recorded first. And again tomorrow morning, suppose I am going to purchase another thing, or sales have been affected, that is also another transaction, and that is going to happen on tomorrow, on 12th May. So automatically the recording of 11th May should be done first, then the recording of the transaction of 12th May will be there in the financial accounting book. And all these things are transactions. So chronologically, historically, when we are recording the transactions, it is to be transferred to next set of books, that is called classifications. That is the work of classifications. Now, before coming to recording of transactions, we should definitely know certain terms. Number one is transaction, that already I have elaborated. Exchange of goods and services in terms of money or in exchange of money is called transaction. Then we should definitely know, yesterday also I discussed regarding capital. Capital is the owner's contribution to the business is called capital. That is called proprietor's worth or proprietor's claim even. Supposing I am going to start my business tomorrow with a capital of rupees 50,000, that is my capital. And again, when tomorrow I think that 50,000 is not sufficient or is not adequate according to my plan to start a business, then I may go for borrowing either from financial institutions, that means either banks, or the previous practices of money lending have not been there in the market. So ultimately we may go for loan from our near and dear, or the common practices in the society is to get the finance from the financial institutions. Suppose 50,000 is not adequate, in that case I go for another 50,000 as a loan from a particular bank, 50,000, and I am going to bank and I am discussing regarding all these things, and I am complying with almost all the paperwork, and they are giving a loan of rupees 50,000. That is called loan, and in a financial accounting term it is called liability. So both my capital and the liability, what I am to, again when I will be financially able, I can give back that money. I should give back that money to the bank. That is called liability. What I have to the debt, which is to be met in future or which is to be paid off in future, is called liability. And both my capital and liability creates assets of my business. Asset means the properties or the capital plus the liabilities is equal to assets. The entire property or resources which are generally used for mobilization of resources or for business purpose, that is called assets. And how it is formed? The total amount of capital plus liability is equal to assets. So, and at the same time, when I am getting a loan of rupees 50,000 from bank, I am becoming myself a debtor, D-E-B-T-O-R, debtor, and the financial institution itself is a creditor. Who gives credit is a creditor, and who takes credit, it may be direct money, liquidated money, or anything else on credit is called debtor. The person or the business entity who is taking with a promise to give back the money in future, that is that particular individual entity is becoming debtor, and the person or the institution which gives support as a loan is called creditor. Now, before coming to other particular terms which are generally used by the financial institution or financial accountant, I will be discussing later on. But before that, I would like to discuss something regarding the concepts and conventions. Concept word has been derived from the word conceive, and convention is something different, which is the mother word is convent, from which it has been the term has been derived, conventions. The concepts are the backbone of the financial accounting system. That means all the concepts of the financial accountings are to be followed very meticulously. And conventions are conventions. It is good to follow the conventions to safeguard the business. Of course, I would like to give an example. The food and our dress, our bare necessities are very essential, which are definitely essential for our day-to-day life. We definitely purchase it. It is as good as concepts of financial accounting. And sometimes we may avoid certain things like crackers and sparklers during your Diwali. We can live without that. So if we have sufficient money or adequate money, and we do have, suppose we do have propensity to spend on that particular item, that is called, we may go for purchasing the same color during Holi, and your crackers and sparklers during Kali Puja or Diwali. All these things are conventional necessities. Likewise, in our business or in our financial accounting practice also, we should definitely follow certain concepts and certain conventions. Concepts are to be meticulously followed, because in our standardized accounting system, which are being followed everywhere on this planet in a standardized way, the way in which we keep our accounts is equal to or is at par with the accounting system, financial accounting system, which are being followed in America, which are being followed UK, and every nook and corner of this globe. So what are these concepts? First one is entity concept. Entity means what is full and complete itself. Suppose we can define a particular book. How a book is defined? Because book has certain chapters with a first page of contents, then chapter 1, chapter 2, chapter 3, chapter 4, likewise. So, and chapter 1 is not being followed by in chapter 2. It has certain links, but the same thing has not been repetitively written. It is written in a systematic way. So then only we can say that it is a book. Only the covers and the blank papers cannot consist a book, or cannot be defined as a book. Likewise, entity is full and complete in itself. And what business entity concept says, our business and the businessman are two different entities. Practically, definitely I would like to give one example. In our common practice, you would have seen in our locality, so many people are doing their business, but generally the people, those who have come from outside, they are more successful than our local people, because we as local people, we feel it very easy, and we are not in a position to differentiate or to segregate these two entities. Suppose I am doing my business and I myself are two different entities. That should be kept in mind, and that the practices of transaction should be done in that way, so that my individual cases, my own transaction and the transaction of the business cannot be mixed up, cannot be juxtaposed in one another. It should be segregated. My own personal transaction should be treated in different way, and the business transaction should be treated in different way. If I am, suppose for the sake of the business, I am going to Baleshwar, and for that I have to, suppose I am spending rupees 100 to go Baleshwar and to come back to my own place, and during that trip I spent 100 rupees. That 100 rupees may be treated as a business expenditure, because for the sake of the business I have I have been Baleshwar, and for that I made an expenditure, or I spent 100 rupees, so that may be treated as an expenditure of the business. But suppose during my trip to Baleshwar, I have some near and dear there at Baleshwar, and I had been to their place. I went to their place, and for that relative, suppose I purchased a sweet of rupees 50, then that expenditure, sweets of rupees 50, will not be treated as the expenditure of the business. Rather, it should be treated as my own individual expenditure, because that is no way related to my business. That is my personal related expenditure. So definitely, very meticulously, the business and the businessman are two different entities, and that should be kept in mind, and that is a very concrete concept of financial accounting, for which we local people, I don't mean to say we Odia people, but definitely that is our laxity, that is our casuality. We take the things in a very casual way, for which we cannot proceed. Next one is dual aspect concept. Dual aspect, in my previous elaboration also I already discussed regarding capital and liabilities, and both capital and liabilities means my own claim to the business or my own contribution to the business, and for the sake of business, suppose I am purchasing on credit, or I am taking certain amount of money from the financial institution, that is called liability, and both the existence of my own capital and the contribution of others as creditors will be treated as liability, and both assets, capital plus liability is equal to assets. So the dual aspects are of two types. Number one, if the businessman is investing from his own, that is called capital, and supposing his resources is not enough to meet the business obligations, then definitely he will go for loan, or he may purchase certain items on credit, that is creating liability, and both the loan amount or the goods purchased on loan as well as the investment of the businessman as capital are creating assets, and assets are there to be mobilized, and then only we can create certain profit, or we can go for certain activities and go for certain mobilization of resources, and ultimately after the completion of financial year or financial period, we may reckon certain, either our business, if our business is potential enough, it may earn profit, otherwise it may suffer loss. Anyway, both the aspects, capital plus liability, businessman's contribution and the others' contribution, both the aspects are very important, and both have to be measured, and if in total it is called assets, and that aspect also to be looked into account when we are going for financial accounting. Then accounting period concept. Generally, you would have observed, when you are going to purchase certain items to particular shopkeeper or to particular business entity in the month of March, generally it is our common practice, maybe a retail shop, maybe a stationery shop, maybe a very small petty businessman, but he would definitely say that for this month don't ask for any credit, because it is the month of March. Why? Now budget will be coming, and their scenario is something different, and at the same time, before completion of 31st March, usually the businessmen are to pay off all the debts which they would have occurred during that financial period to their landlords, from whom they usually take the things on credit. That means they take the plea, we have to give to our people or businessmen from whom we have taken the things, or we have purchased the goods on credit. So this month we are not in a position to give or to sell the things on credit. What is that? That is called your accounting period. Usually from 1st April to 31st March is one accounting period from the practices, but it may vary, it is not fixed. One businessman may say, yeah, my accounting period starts from 1st January and it will end on 31st December. It doesn't matter, and particularly after the advent of this computer technology and computer software system, now it is very easy. Now the accounting period concept has been shrinken to 1 day even. After completion of one transaction day, we are in a position to know the financial performance of a particular business. So that accounting period may be 1 year, or semi-annual means for 6 months, or quarterly means for 3 months, or 1 month, or 15 days, or 1 week. But generally it is our common practice to measure or to take the financial accounting or as accounting period from 1st April to 31st March, because generally almost all the authorities in our country set aside their transactions or their obligations, keeping the relation with budget system, and they are having the practice of financial commencement period is 1st April and it ends on 31st March. So that is to be definitely kept in mind when we are keeping the accounts and we are doing various activities on financial accounting. So this is also another concept that definitely accounting period should be kept in mind. Next is going concern concept. Going concern means, suppose from tomorrow I will be starting my business, but I have to keep my accounts, I have to keep my records, financial transaction records, as if my business has been continuing since long and it will be continuing for an indefinite period. That means not, of course I will be tomorrow I will be starting, I may start my transaction from purchasing of goods, and the date would be date of 12th May will be recorded in my books of accounts. But as conceptually I have to take this thing in my mind, I have to reckon this thing in my mind as if my business entity was there and is there and will be there for an indefinite period. That is called going concern concept, and financial accounting has certain bearings on it. Then money measurement concept. Money measurement concept means we should definitely focus on money, means the transactions which is related to money only, that should be recorded in our books of accounts. In the business activities also we do certain activities which are not related to money. Means suppose our guest is coming to us, and when our guest is there, it is our common habit in our country, we may offer one glass of cold water. That giving of one glass of water to our guest is not monetarily influenced, or it has no relation to our business money or money of our business or resources of our business. So it is not to be recorded in our books of accounts. Almost all the transactions which has bearing with money, which has relation with the money, are to be recorded. All other things, suppose for a charity we are doing certain things, certain work, and for that we are not giving any money, that event or that incident or that activities are not to be recorded in our books of accounts. So the activities which has bearing with the money, either we are paying right now or we have taken the promise we have to pay in future, then it is to be recorded. If it is not related to money, and for that nothing we have to give, nor we have to receive, then it has no place in our books of accounts. So we have to keep the records of all transactions which has money, which is money related. Then your periodic matching concept. Matching concept means our activities definitely should have relation with our resources. Supposing in a particular financial quarter